In this week's episode, I interview co-founder and CEO of AIDvisors Luc Begnoche.
It's the fact that you cannot have one fixed recipe that you always follow and that will always work. Because the stock market is always changing. So you need to adapt to it. And this is where artificial intelligence is so important. So then the thing that you are trying to beat is how fast the other players in the market are learning. And you just want to learn faster than them. The big problem with AI in general right now is that it's a black box AI. You don't know what the AI understands. And my point here is that creativity and evolution is always led by people who decide to be different.
From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges Podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Hello ladies and gentlemen, this is Houston, and welcome to episode 32 of Trading Edges. And this episode, we're going to be talking about artificial intelligence, or AI, and trading. Because nowadays we read a lot of headlines around the exponential developments around AI, and how many companies are sort of rushing to bring these AI-related technologies to market. And the promise is that AI can and will change the way we do everything. That is, the way retailers sell, the way we make purchases, drive cars, practice medicine, grow crops, and so on and so on. But what will AI do to trading? So, to help us explore this topic, I've invited co-founder and CEO of startup AIDvisors Luc Begnoche to share his perspectives around the history of AI, the different applications of AI, the application to trading, and how Luc's company is bringing to market a consumer-friendly AI-driven trading service. Take a listen to the episode, leave us some feedback, and let us know what you think. Because on the one hand, we hear about the dangers of AI sort of taking over the world, right? And on the other spectrum, we hear about all these potential human-assisting benefits. So what do you believe as pertains to trading? Will AI disrupt the financial markets? Or will AI ultimately make the markets even more efficient? Head on over to the show page at thetradingedge.org/32 to leave us your feedback, as well as find links to the resources we talked about on the show. Without further ado, let's get into the show. Welcome everyone to episode 32 of Trading Edges. So, on the podcast today, we have Luc Begnoche, and Luc is the co-founder and CEO of AIDvisors, which is basically a platform that brings together artificial intelligence, or AI, and retail investing. And Luc recently presented at one of our monthly Montreal meetups, Montreal Traders meetups, and he presented on the topic of AI and trading. And I just found his presentation to be really, really fascinating. So I felt like I had to bring him on the podcast to share his perspective. So Luc, welcome to the show.
Thank you very much for that opportunity.
You bet. It's great to have you on. So why don't we get started from the beginning? Share with the audience, what's your background?
Yeah, so the background in trading, basically I started in 1999. I did my first trade with Disnat at Desjardins. At the time, I knew nothing about the stock market, and I was simply reading the news that Disnat were sending. And then they said that there was a furniture company somewhere in Quebec, that it was time to buy it. So I bought Bestar. I put 2,000 in it, and it was basically a big mistake because I sold it many years later for all the price. Nice. So a big mistake. So at the same time, I also put some of my money into the into some mutual funds. So one of them was high technology, just before the bubble. And then another one was conservative industries like oil, for example.
Okay.
And the idea is that the conservative one made enough money, so I was kind of break even a few years after that.
That's good.
But yeah, so that was my first experience with trading a very long time ago. And what I learned at that time is that basically you should not listen to news because it's just a bunch of noise. You must diversify your money for sure, because you never know what will crash, what will go up. And then the idea is that you don't want to buy and hold. So as soon as you find out that basically, for example, an economic sector like high technology is going down, the best is to sell it as fast as possible. So basically that's my background in terms of trading.
And so, with your business background and your software background, how did you get interested in kind of putting and merging that together with trading? How did that come about?
The reason why I came up with the solution I have right now, it's in fact coming from my history of how I traded, because I didn't have time to trade. I was going at school, doing masters, for example. I was working full-time and overtime, in fact, so I didn't have time to look at the stock market. I just didn't. So what I was doing is playing with ETF. I was playing with ETF, and then I was trying to find out if it is time to buy or to sell that ETF according to some news or some analysis that I will do. But I was really more on the quantitative analysis side, especially the technical analysis. And technical analysis will work with some ETF and will work less with some other. So anyway, so the thing is, then what I did with the solution is to come up with a lazy solution. Okay, so because I don't have time to spend on the stock market, so I wanted the computer to do the analysis for me automatically, and to even do the discovery process to find out what technical analysis pattern can we use to find out how an ETF works, if there is any. And then the idea is to come up with a model that is optimized automatically without me putting my time in it. And then the way I trade today, it's basically by subscribing kind of to my robot. So I look at different robots that looks for different kind of patterns. And at the end of the day, then I verify if I have to do something like selling or buying. So that's really what I do. I don't spend much time in the stock market because it's not really the fact that I'm lazy. It's really the fact that I'm too busy to spend time on that. So I let the machine do the work.
Yeah, that's interesting. So can you comment then? So what's the sort of evolution then, as you kind of laid it out, right? You have kind of traditional quantitative analysis, there's technical analysis, and then all the way now to like artificial intelligence. So what is kind of that evolution? Can you share that with the audience? So where do things kind of begin, and where do things kind of stand now?
So, in fact, artificial intelligence exists since a very, very long time. And at the time, it was more about symbolic and concepts. So it was not all about statistics. It has been how can I say that? The evolution process came up with today what we call deep learning. And then deep learning, it's all about probabilities. Nothing else but probabilities. So the thing is, quantitative models and quantitative analysis, it's also all about probability. So what you are looking for, it's pattern in the past that repeated, and then you expect that those same patterns will repeat in the future. And then artificial intelligence is really just kind of, it is just natural that it plugs to quantitative analysis. Because at the end, the thing that it allows you to do, it's to learn automatically from those metrics that you got from the past and those patterns that you found in the past, and then to continuously find out if they still apply today.
Right.
So this is just a natural mix, in fact, quantitative analysis and artificial intelligence. I will even say that maybe it's almost the same thing, because artificial intelligence have many how can I say that? There are many kinds of artificial intelligence, and one of them is statistical artificial intelligence. So at the end, the quantitative analysis is maybe kind of a subfield of statistical artificial intelligence.
Gotcha. Yep. And so I think most people are probably, if they haven't figured it out yet, so I think You know, they're like, with all the headline news you hear about trading algos and them being responsible for things like the flash crash a few years ago, what's the difference, if there anything, between like a trading algo traditionally and like AI as it's kind of being used nowadays? Can you kind of talk about the difference between those two things?
Yeah. So algo trading, it's kind of a recipe that you apply for the long term. So you find a recipe that worked in the past, and then you do the assumption that it will work for the long term. And then what is happening is that when you do that, then you have those expert economists, not expert, I should say just economists, who believe in the efficient market theory and believe that you cannot understand the future by looking at the past. So those will use the fact that those algorithm becomes, or I should say decrease in terms of performance, in terms of financial performance in time. So they use this argument to say, yeah, you look at it, you cannot explain the future with the past. Okay, so the thing is that highlights one problem of algorithms. It's the fact that you cannot have one fixed recipe that you always follow and that will always work.
Right.
Because the stock market is always changing. So you need to adapt to it. And this is where artificial intelligence is so important. Because with AI, you can, in a performant manner, so I mean quickly, you can quickly update your algorithm. And this is exactly what we do at AIDvisors. What we do is that we basically take kind of a recipe, but then we change it. So the AI is there to change the recipe all the time and to verify every day, is that the best recipe so far that we have for today? And then, yeah, we believe that the past explains the future, but we believe the past explains the future in a short period of time. So the idea is that you need to always continuously update. And what we found so far is that normally you want to update at least at every 2 weeks to stay up to date. But even if you update maybe just like a year after, it's highly possible, like at 75%, that the model you found will still be good. So you don't need to change every 2 weeks. But what I'm saying here is that you have the ability to change every 2 weeks just to make sure that you always have the most optimal recipe or algorithm. So yeah, so that's the difference between a static algorithm and a dynamic algorithm that is always improved by AI.
Very interesting. And that 2 week kind of interval, is that based on, let's say, daily data or something different? What
yeah, so that's based only on daily data. So if you do intraday, and right now we don't, we could use the same engine to do intraday, but we don't. But I suppose that if you will do intraday, then this period will be a lot smaller.
Okay.
Yeah. And maybe the efficient market hypothesis is kind of true. Maybe it is. And the thing that will happen then, if you think about it, is that because all the agents or all the traders playing in the stock market learns how it goes, so then they influence the market. So then the thing that you are trying to beat is how fast the other players in the market are learning. And you just want to learn faster than them. So you could see this 2 weeks like this. You just want to beat how fast the other traders will learn.
That becomes a real race of kind of adaptation, right? That's a fascinating idea.
Yep.
Yeah. Because you're not necessarily trying to get any smarter than them. You're just trying to, kind of stay one step ahead or change in the right way. Yeah.
Exactly. Yeah. But again, let me just say again that even what I found is that most of the time you can stay with the same algorithm for like a year and it will be good enough. It may not be the most optimal, but it may still be good enough for a year after that. So the market is not changing at a fast pace. And again, it depends on what security you look at. I mean, what stock you look at. Yep.
And so some of the things you might optimize would be things like the parameters of some of the indicators you might use, or like the different maybe duration of some of those hold periods.
It's a mix. It's a mix of what you said. It can be the periods. It can be some parameters as well. the thresholds, for example, that could be a threshold of an oscillator. So an oscillator is always from 0 to 100 or minus 100 to 100,
right.
And then you have threshold there. So those can be parameters as well. But also another thing is you may want to input into your system the ability to look for different triggers. Okay, so it doesn't mean that you always want to look at the same oscillators, at an MACD, at a moving average, and you maybe sometime you want to look at the moving average, sometime you want to look at the stochastic oscillator. So the idea is that you have to basically have also some kind of logic that plays with what you are looking at. And most of the time you want to look at more than one indicator, not only one. And each indicator should have different threshold that adapts in time. And then another part of it, it's basically what we call fuzzy logic. So fuzzy logic is there to take decision when you are uncertain. And that is highly important. The idea is that in your algorithm, it's not because you have some parameter that you want to be strict with those parameters.
Right.
You want to basically think in terms of fuzziness, in the sense that it's never black or white. It's always a shade of gray. And what you want to find out is how tolerant to what shade of gray can you be in order to be in the market or to stay out of the market. And this kind of logic that deals with the fact that you are not certain of everything, that is so important in algorithmic trading. And then the AI also will adapt easily, a lot more easily if you are less strict with your recipe.
Yeah, it just seems that would mirror the real life much more than simply kind of binary yes or no type of scenarios, right?
Exactly.
Yeah. So just to circle things back a bit, and you already dropped a few nuggets on us, but can you give us like a quick crash course around AI? You talked about deep learning already and fuzzy logic. What are the different types of AI? Where do things kind of begin, and what are some of the more common, I guess, methods of using AI?
In fact, there's a lot of different kind of AI.
Yeah, I know at the meetup you spent like an hour on this, so I'm asking you to do a big job here to distill in like 10 minutes.
So let's just basically let's start with deep learning, because everybody not listen, but hear about that today. So let's start with this one, because from the deep learning you can understand, in fact, a lot about AI in general. So the first thing that I will say is, if you look just at deep learning, what it is at the end, it's a deep stack of multiple layers of neurons. So what I'm trying to say here is that you have layers of neurons that will have like millions of neurons in it, but then you stack on top of each other all those layers. So at the end you have a very deep set of layers. Now they do layers. I mean, they do like 28 layers, 40 layers. I think I've seen 60 layers. So that's what they mean by deep. It's the fact that there's a deep set of logic. You could see each layer is like a different kind of logic. All those layers of neurons, what they do is to deal with probabilities. So that's it. It's nothing more than that. It's dealing with probabilities, and then trying to find pattern in it. So the thing is, the human brain does exactly the same thing. We are looking always for a pattern. And this is why, again, I want to shut a little bit at the efficient market hypothesis, but the idea is that the economists try to force you to understand that there is no logic in the market, that any logic that exists was just to explain the past, but as soon as you can explain the past, this is gone away, and then you cannot explain the future. It's good for the economists, because then this way they can always say in the media, oh yeah, you see, I didn't know what will happen because it's impossible to explain it. Sure. So the thing is that they just do that to save their job, it seems to. But the thing is, what I'm trying to say here with AI and the human brain is that AI and the human brain is all about probabilities of what occurred in the past. Nothing else. Absolutely nothing else. So the idea is that this is what they basically, with the deep learning, they redo the human brain, but in a way that they calculate it in a computer. And then the thing that I will say is that you can look at that like a football game. So let's say you had a human being, who look at a football game for the first time. Then the thing is that he will quickly find out the patterns on what he sees, even if he have never seen a football game. So the first thing is that maybe he will notice that, okay, there's two teams with different color code. Okay, it will maybe take time to understand that it's two teams, but he will find out that there's two different color code on their outsuit. And then the idea is that at some other time they will understand that, okay, everybody is running in the same direction. At some point in time, they are all running on the left or all running on the right, and then at some point they will start to understand, okay, they are running after the ball. So they are trying to catch the ball. And then you should find out at some point that, okay, every time that a team has the ball, they try to keep it. The other one try to take it. So those are the kind of patterns that a human brain or AI is able to detect. They can detect those kind of logic in what they see or what they hear or whatever. The problem with deep learning, and this is where it comes very interesting for AI in general, is that the deep learning can understand but cannot put words around it, first of all. So it cannot put words around it because so far the AI is not advanced enough to be able to kind of extract information of those layers I was talking about before, and then kind of find out how to put it in words and even to communicate it to someone else. And that's the difference with a human. A human will look at a football game, will understand everything I said, and then will be able to put words and explain it to someone else. And then this other person who got that explained to him, what he will do is that he will look at a football game and then he will start to criticize what the other human said, because he will understand a little bit differently how the football game is going. And most of the time, this is why you have people for different teams. They have a different understanding. They like a different style. So what I'm trying to say here is that human has a very high level of diversity in their understanding, plus the ability to communicate between them. And so far, the artificial intelligence is lacking all of that. So the big problem with AI in general right now is that it's a black box AI. You don't know what the AI understands. And this is why sometimes some other kind of AI are more interesting, especially the expert system. Expert systems don't really learn fast. In fact, they are really dependent on people. But the thing is that at least you can understand what the expert system understands. And it's a little bit the same with like a Bayesian network. It's kind of a different... a smaller AI than deep learning, but it uses the same kind of probabilities within a network. But the thing is that with a Bayesian network, you can understand what the networks says in the sense that you could put word on it, but you cannot do that with deep learning. So anyway, just to make a long story short here, the thing is that deep learning is the most popular right now, because the rate at which it can learn is really high, and it can learn almost anything. The problem is that we are not advanced enough to be able to understand what the deep learning understood. And then the idea is that this is why I believe that still some other level of AI are still interesting today, because it allows you to basically understand what the AI understands. Yep.
So what are some of the that's a great explanation, by the way. So what are some of the drawbacks? And if it's just a big black box and you don't know what's exactly going on inside, what are some of the cons against that, in your opinion? So is it because it's just so obscure? Yeah.
Did you ever see the movie called Rain Man?
Yeah, right.
Yeah. Okay, so it's an autistic person. So basically,
I like that analogy.
Yeah, it is. But this person can learn very fast, can do some calculations that nobody else can do.
Yeah.
But how can you deal with that person?
Right.
It's highly difficult. So the thing is, I don't think that we shouldn't too much compare autistic people like in Rain Man to deep learning. But the point is, I believe that there is still before we can adopt mainstream artificial intelligence in our daily life, there is still some progress to be made in terms of communicating with the AI and making sure that you just don't follow it blindly.
Right.
Yep.
Yeah. I guess that's where some of the fears come from, right? I guess a lot of people have a mistrust in AI because they're scared that there might be just some black box that kind of runs out of control.
Exactly.
Yeah.
And this is why at AIDvisors, what we are trying to do here, it's basically to come up with a new feature in the next few months, which will be the fact that the AI will tell you why it tells you to buy or why it tells you to sell. So the reason why we are able to do that is because our AI is kind of a developer of the algorithm. But at the end, there is always an algorithm that exists. The algorithm changes, as I explained before, but the algorithm is there, and you can read that recipe. So because you can read that recipe, you can know the reason why the AI is telling you when to buy or when to sell. And definitely, I believe that this is highly important if we want to have adoptions in the long term of AI by the common consumers.
That makes sense because there has to be that kind of level of trust, and it's hard to have that trust without the kind of the consumer or the human trader at least seeing some of the rules that are going to be used in the decisions, right?
Totally.
Yeah. So let's take some time now. Why don't you share with us more? You've already kind of given us a little bit of a sneak peek there, but share with us more around what your project is and how it kind of links together AI and investing.
Okay. So, can you say again, Houston? Sorry for that.
No problem. Yeah, I was just saying, why don't you share with us now your project? How does it link together AI and investing for retail traders and consumers?
Okay. So basically, our mission at AIDvisors is to democratize AI and finance. And what we believe is that basically the democratization process will have to pass by accessibility and affordability. So what we try to do is to simplify the user experience to make the AI accessible to all the individual investors, even the one without expertise. So that's about the accessibility and the simplicity of the tool. But then the affordability, what we do there is that we automate everything. So as I said, the AI is basically analyzing the market continuously in order to adapt the recipe and the algorithm. So the fact that we don't need a quantitative analyst to do it, but just an AI, the cost is very low. And because the cost is very low, it allows us to keep the price very low as well. And then what we want to do is to make AI affordable to all individual investors, independent of their budget. But definitely in the marketplace, what we'll do is that there will be some AI that will be more advanced with a higher price. So definitely we'll do that. But at the basis, what we want to do is to provide the ability to anybody to make some money in the stock market, even if they don't have expertise and even if they have a small budget. So that's what we call the democratization. And then the other thing I will say is that basically the way to give a little bit an understanding of what AIDvisors provide to the individual investors, when you come on the website, the thing is that you just try basically to create a portfolio of robots. Okay, so normally you will try to do a portfolio of stock. What we propose that you do is that you create a portfolio of robots. So what you do is that you look at the different stock that you want to invest. Or maybe you don't even know. Maybe you will look just for the best result possible. That's also another way to find out. But if you look for specific stocks, then you will see the list of robots that we have, and then you can pick and choose which one makes more sense to you, depending on the results that they got in the past. And then the idea is that out of that, you create basically a portfolio of robots. And what we ensure on our side is that all those robots that you put in your team basically will be continuously learning, so it will be adapted to the stock market. So that's what we ensure. So it means that basically every 2 weeks, as I said before, we redo the learning process based on the new set of data that we have to make sure that everything that we proposed is still good. And we even have a confidence level on our side that we use internally, and that we will expose really soon. We'll expose it to the user, but a confidence level on how much trust you can put on that robot. And this confidence level is all based on the fact that we look at how good it has been performing in the stock market compared to what it did in the past. So it means that in the last 2 weeks, we look basically at what it did and is it still behaving like it was before. So if it even happens that the economists are right with the efficient market hypothesis and the future doesn't depend on the past, then we'll know that, because we'll find out quickly that basically, yeah, we start to behave a different way than in the past, and then the confidence level will go down. And the idea is that this is information that we provide to the individual investors, because we really want to make sure that transparency is part of our platform. And if we are not able to learn, we prefer to tell you, choose another robot or choose a different stock, because this stock is not behaving normal, so we don't know anymore.
That's very cool. So really, instead of having like a portfolio of mutual funds, instead you'd be sort of like more of a fund-to-fund manager, where instead of managing managers, you'd be managing robots.
Yes.
And so then you'd be trying to, basically be picking the best horse, so to speak, and having that horse run your race for you.
Yeah, exactly. It's like a portfolio of quantitative analysts.
Right.
So it's a portfolio of quants.
Yeah.
And then, exactly, that's it.
Fascinating. And so just right now, how many signals, so it sounds like you're taking daily signals, how many signals is typically generated by one of these robots in a yearly time frame?
That depends. It is one of the metrics that we track.
Okay.
And very, very soon will allow the user to even search by the transaction, the average transaction per year, because it's highly important depending on the amount of money you put in there.
Gotcha.
But some of them, like if I remember well, on gold and on the SPY, so the S&P 500 Spider Trust, and then on the gold trust, on those I've seen robots as low as like 2 trades per year in average. Yeah, so that's the kind of the best you can do. And then if you decide to do pair trading between S&P 500 and gold, which actually work, by the way, then the idea is that then you have pair trading with 2 robots. And the idea is that they just do two transactions a year. So that is the best you can get in terms of the lowest transaction. What I just said, like pair trading with 2 robots, 2 transactions a year. So that will give you like 4 transactions a year. Yeah. With your portfolio. But then the idea is that you have definitely some other robots, like one on Tesla. It was really good even last year, and every year before that in the simulation it was always beating Tesla. But then the average transaction per year was 27.
Okay.
So I'm not sure that
a
lot. Exactly, a lot. So it's not for everybody. So you have really a high diversity of AIDvisors in the marketplace. It's just a matter of finding what you want.
And so really, I think it's going to be up to the individual then to kind of do their own due diligence, to kind of figure out, all right, which of these bots or which one of these AI bots kind of suits my personality best, right? And then kind of constructing that portfolio of bots that you think could best meet your goals. Maybe some with a little higher risk, some with a little more conservative, more of a conservative approach. Is that kind of the idea?
Yeah, exactly. And right now, I can tell you it's a challenge we have in the user experience, because as I said before, the user experience is key. If we want to democratize it and if we want everybody to use it, it must be simplified a lot.
Right.
But the thing is, right now, even if we just provide like a search tool, it's not enough. And I think we are not anymore in the Google age where you just search. What people want, because we do user interviews and everything, so we have the feedback of the people. But what people want, it's not to search for an advisor, it's to build an advisor.
Right.
So then what we find out is that basically the thing is, in what we do, there are kind of 3 components. You have the robots, which is the advisor, then you have the stock, and that gives you a specific result, because you combine this advisor with that stock that gives you a result.
Yeah.
And the thing is that you can search through any of those dimensions. So as you just said, you could search for a robot that is conservative, or you could search for a robot that is doing just technical analysis, or another one doing fundamental analysis. You could even search for a robot that is just using the MACD. It doesn't exist today, but we could do it easily in the future. But anyway, so the thing is, you can search for the kind of robot you want. Then you can search for the stock. So if you search for the stock, then you can start to search by just the ticker of the company, but it can be the economic sector, it can be the country, it can be many things in the stock that you look for, including all the econometrics of that stock. And then you can also search just by the final result and say, I don't care what stock, what robot, just give me the best you have in the database.
Right.
Based on the lowest volatility or the highest risk. So anyway, what I'm trying to say here is that what we are trying to develop right now, it's a way to go through all those three dimensions, robot, stock, or final result, and to give an experience to the user that tells them this is how you build your robot. So basically, if you want to start by the characteristic of the robot, start there. If you want to start with the characteristic of the stock, start there. But then we want to give them an experience that they are basically building a robot and not just searching in a huge marketplace.
Yeah.
So it's a UX challenge.
Yeah. And so, what do you say is the kind of the difference between your service versus something like more traditional, like a robo-advisor service, or things like Wealthfront and Wealthsimple?
Yep. It's a good question. So again, I come back to the efficient market hypothesis. Sorry for that. But the idea is, again, it says that basically you can explain the future using the past. So then the thing is, it's funny because normally this efficient market hypothesis is used a lot by the banks, in the universities, to explain that anyway you should just buy an old, so you cannot because anyway you cannot understand the future. So you cannot predict the future. So what is funny here is that this robo-advisor technology is based on another very old theory. In fact, it's even older than the efficient market hypothesis. It is basically the modern portfolio theory. And what is funny about it is that it is in contradiction with the efficient market hypothesis. Yeah. So I'm kind of amazed to see that the financial industry use it at the same time as they say nobody can predict, so they should buy an old. But the thing is, what they do is that they allocate the money based on the variance and the deviation of the past returns, and then they basically assume that the future variation and deviation will be the same as in the past. And then they basically get you a profile of investor, and then they say, okay, you fit here, so you should allocate it this way, and that's the best way to minimize the risk. And they assume that the only risk is the volatility, which is neither the case. But this is a good methodology. It's one of the first quantitative analysis method that existed, by the way. But so I believe in it. I believe it is very old, and that it can be done better. I mean, there are better stuff out there than this theory. But the thing is, RoboAdvisor just took that very old theory from the 1952, and they packaged it in kind of a simple algorithm that the banks were already using in their mutual funds. And then they now just propose it to the people. So which is good, because at least they propose a very old technology for a low fee. So what I mean here is that it's better than the bank proposing a very old technology for high fee,
right.
which they were doing. So it's definitely progress. But at the end, it's not the best progress we can get today, because you have hedge funds out there, quant funds out there that are making a lot of money, like 35% a year in the case of Renaissance technology. And the thing is that those technologies exist to make a lot of money on the stock market by analyzing it with computer and AI. People just don't know about it. And then what they get served is this cold plate, which is a robo-advisor.
Yeah.
But I believe that if you have just like 1,000 to 5,000, robo-advisor are good enough. It's a good way to start. So I should not be too harsh about it.
And what do you think is the future then? Because, if all of a sudden, let's say, a platform like yours takes off and it tracks, hundreds and thousands, let's say in the future, I hope you guys get millions of end users, right? Would that change the way the marketplace begins to function? Like, would that begin to eat up edges more quickly? Have you ever thought about what the future would look like if all of a sudden we have, the majority or a lot of the capital being controlled by a kind of AI kind of decision making kind of methods?
Okay. Yeah, so let me be a little bit philosophical here.
Sure,
first. Yeah. Okay. So basically, not a long time ago, even here in Canada, in North America, but if you look like 300 and 400 years ago in Europe as well, everything was about religion. In fact, I should say 200 years ago. Everything was about religion. And the thing is that religion, what they do is that basically what they did at the time is that basically they wanted to control the message. They wanted to basically they didn't want people to read even the Bible. They were reading the Bible for them. The priest was reading the Bible for them. And then you started to have this country called England, but that's a really long time ago, who decided to do otherwise. So they decided that people could read the Bible. They decided that priests could marry a woman. They decided to be different. And my point here is that creativity and evolution is always led by people who decide to be different. And this is even true in nature. That's always the case. But the point here is that even if England at the end dominated the world, it took some time. It took a long time. So it's not a process that comes up and then change everything at once. It's never like that. So I don't believe that the finance industry, which is acting like a church today, I don't believe that the finance industry will just quickly say, okay, let's use all those technologies. No. They will keep saying the same message as today. Buy and hold, you cannot predict the market, and whatever. And then the idea is because of that, you'll always have a lot of people who will just follow the church until the church decide to change. So the point here is that I believe that it will first never happen that basically AI in the retail investor world will become mainstream. I don't think it will happen. I think that many of them will still just go at the bank, put their money there, and ask the bank to invest it for them. And then what I will say, let's go in the theory now. So that is in practice. I really don't believe that we'll have like more than 50% adopting AI in finance. I don't believe that. But now let's say that it will happen. Okay. So if it will happen, what I believe is that then the market will truly become more efficient. Because then you will have all the assumptions behind the theory, behind the hypothesis, that agents in the stock market are all rational. They all have the same kind of information. And then the idea is that, if you will have more and more and more people using kind of AI to do their decision, to make their decisions, I believe that then you will come closer to the efficient market. And if you come closer to the efficient market, what it means is that you will have less lows and up, I believe. Right. I believe that basically it will be a lot more stable than it is today. So I don't think it's a bad thing if it will get there, but I'm sure it will not get there because there's a huge financial industry out there that needs to keep the control, to keep their money. So it will take some time before people adopt something else.
Yeah, that's a great analogy, right? Like just the vested interest of either the church or in this more example of the financial industry is the status quo, and they have no desire to change that because they're making a lot of good money right now the way it is. So
exactly.
So yeah, that's a very, very good point. And I want to be respectful of your time as we're getting close to the end of the hour here. Luc, you've given us a lot of things to think about, and you're really deep on the matter around AI and technology. So if other listeners out there who are interested in kind of peeling back the onion and learning more about artificial intelligence and some of the topics you talked about today, Are there any kind of top books that you recommend people check out, or any other resources that you find valuable?
Yeah, I'm not reading a lot of book, by the way, these times. I'm
Sure.
reading thesis about AI.
Yeah.
A lot of thesis, legal documents as well. So that's what I'm doing.
Yeah.
But yeah, books, not a lot. But if someone wants to start in AI and in quantitative analysis, one of the best websites, and they propose also some books. So there are some books written by the same people who maintain the website. So that website is quantstart.com. And I believe that this is one of the best one out there that give you hands-on tutorial, where to start in order to be able to do quantitative analysis and AI, if you want to do it by yourself.
Yeah.
Yeah.
Awesome. Thanks for that recommendation. I'll definitely put it up on the show notes. And I thought, I think you touched upon something really important. I think a lot of people are interested in this idea of, how to apply more technology, things like AI, into their trading. But like you said, like the hardest part for most retail investors is the accessibility, right? How do you begin to even approach this if you don't have a technical or development background? So I think what you're putting together, Luc, is something very, very interesting, and I hope that people check it out further. So if people are curious about what you're doing, what's the best place to contact you, follow you? Where can people engage with you further and find out more about your offering?
Yeah. So we have a website. It's www.AIDvisors.com. So AIDvisors.com. But the idea is that we just use it right now as a kind of a beta when we do our interviews with user, because it's not even a beta, it's an alpha, whatever you call it. So the thing is, the best way at this point in time to basically get in touch with us, it's just to go through me or one of my co-founder. But my email, it's Luc, so Luc at AIDvisors.com. You can contact me directly. In fact, it's the time, because right now I'm just looking for people feedback. So it's right the time for that. And then what we are looking at is to launch in April, basically a closed beta. So in order to get in the list of that closed beta that will launch in April, then the best is to contact me. But if you go on the website, you can also subscribe, and then we'll get your email. And the idea is that we will reach you, and we can put you on the closed beta if you fit. So yeah, I will say that I'm sorry, but it's really a new startup. So we are just incorporated since November 2016. So the thing is that I'm sorry, I don't have all those stuff in place to kind of welcome you. But then the best is really just to send me an email at luc@aidvisors.com. And that will be that will be it for now, until we get the public beta out there in June, we believe.
Sounds cool. I'm definitely going to sign up, Luc, so expect to see my email address. One other thing is, just for some folks who might be curious, so what products and instruments and markets does the current portfolio of robots, trade against?
Okay, so right now we basically have a bunch of ETF in different economic sector in US, plus a bunch of ETF in different country indexes, plus some companies, for example, like Tesla, IBM, Google, Apple. So some of the popular one, but not all of them. And the reason why we come up with that first set of stock, it's simply because most of them are not correlated with each other. They are kind of very different, especially when you look at the different country indexes. So the thing is that it was a way for us to test that our robots can adapt to anything. So that's why we started with that set. But then the goal by the end of the year is to have 18,000 stock or ETF, both of them. So we want to do 90% of the Canadian stock market and the US stock market. But we don't deal normally with stock that exists since 2 years, for example, because it's not enough to verify what I just said about the confidence level.
Sure.
So we want stock that are there so we can verify that, yeah, we have a confidence level that we are able to predict a little bit in the future based on the past. If we don't, then the confidence level is down.
Yeah.
But anyway, so the thing is, the goal is to get the vast majority of stock that exists in the American stock markets and the Canadian stock market.
All right.
Yeah.
Very good. Well, I find this project really fascinating. I wish you guys, the best of luck as you begin to roll things out. Thank you again, Luc, for joining me today on the podcast. It was just great to have you on the show.
Thank you very much.
You're welcome. And for the listeners, as usual, you can find all the show notes and all the resources that Luc and I talked about today by going to the website at thetradingedge.org/episode 32. Thanks everyone for tuning in. Thank you for listening to this episode. I wanted to let you know that at the end of last year, I finally rolled out my latest development program called The Keys to Your Trading Business, which goes into everything it takes to create a successful trading business. Now, most traders focus on just trading, and they miss out on this whole other aspect, and that is they neglect to run their trading operations as a business. So if you're truly interested in trading for a living and not simply as a hobby, then you need to begin to think of your trading as a business and structuring it as such, right? So the program includes how to structure that profitable trading operation. That is creating a business plan and a trading plan. Yes, a business plan, not just a trading plan. The key elements around creating the right mindset around, your business. How to create lasting behavioral change so that you do what you have in your plans. The tools, the resources, the routines that are required for a successful trading business, as well as some of the resources like setups that I use every day. I show you, if you struggle to put all of these pieces together, this will shortcut your journey and save you thousands of dollars. But more importantly, it'll shave off hundreds or thousands of hours, which you can't make back. You can always make the money, but you can't make back the time. So if you're interested in learning more about the program, head on over to thetradingedge.org/go. Again, thetradingedge.org/go. And as listeners of the Trading Edges podcast, I wanted to give you all an opportunity to shortcut your trading success. So what we're going to do here is, if you leave us a review on iTunes, we're going to go ahead and provide one lucky person with a free copy of the program, with one free month of one-on-one coaching with me to teach you, all the ins and outs of structuring that business, how to, consistently extract money from the markets, and to build that trading operation you've always wanted. So head on over to iTunes, and after we hit 50 reviews, that's 50, we'll go ahead and pick one lucky person that will win that program as well as that one-on-one coaching, which will be in value of excess of $1,000. So once again, if you're interested in learning more about the program, head on over to thetradingedge.org/go.
You've been listening to the Trading Edges podcast. We've taken this interview and summarized all the big ideas so that you can take action. Just head over to thetradingedge.org/podcast to find the show notes, transcript, resources, and to continue the conversation.